Dear colleagues, thank you for accepting our invitation. Today, the Central Bank's Financial Stability Report 2024 will be published. The main highlights will be presented by Mr. Galstyan, followed by Q&A. Good afternoon. Unless you mind, I'll start with the presentation and then we'll move on to the Q&A. Like Haik mentioned, we'll be speaking about several principal highlights of the recent developments over the year of the financial system, financial stability related main risks that we see as a result of the stress tests we have incorporated, and the financial stability policy measures. In 2024, the financial system in all of its sectors registered increase of assets, and the financial system ensured the continuity of financial mediation, offering incessant financial services to economic agents and the population. The banking assets continue to comprise the majority of the assets in the financial system, about 83%, about 11 trillion AMD, which determines that in our financial stability report we mostly dwell on the current developments in the banking sector, the possible risks and the stress test results to contain those risks. One thing that we added over the previous years is the investment companies' annual growth. You see that it's 57.1% of an increase growth. Pretty impressive numbers we have in this respect as well. In 24, the banking system in its loan portfolio to the economy increased 25.5%. The deposit portfolio grew by 14%. The loans increased almost along every major line of lending. In the course of the year, high growth rates were registered both in households and business loans. Moreover, the household lending high increase was contributed equally by consumer and mortgage loans. As for business loans increase, the biggest contribution to it is industry and construction. Over the year, we have observed consumer loans great demand and an increase in the volume of lending. This could be explained by the increase of the income in the economy over the adjustment and convergence of the previous year loans, as well as new apartments, long-term white goods and other goods that need to be purchased. The mortgage increase also remained high, especially accelerating within Q4. This may be determined by the December or January phasing out certain projects. This expedited the decisions, behavioral change in expediting decisions to buy real estate in view of phasing out in year one of the income tax return. In the background of activity in the lending, financial mediation increased as well. Household, consumer and mortgage lending increased the burden of borrowing. The economy increase was accompanied by continual increase of the terms of the loans. The blue line on the right graph is the increase in maturity. In these conditions, the households received an opportunity to maintain a relatively stable burden of servicing the loans. The policy rate over a year was decreasing, but the market didn't respond adequately to it because of the high demand for lending, as well as ancillary risks associated with the uncertainty in the geopolitics. The increase of incomes of households and the NPL share continued to decrease. On the average historical level, they are now below it. But in certain sectors of lending, a possible accumulation of risks and high global uncertainty continues to have the lending risk high. In real estate, we have seen the trends of slowing down of the growth of prices, the gradual phasing out of the income tax return, and the possible saturation of the real estate market have resulted in we consider it possible the subsequent slowdown of the lending. In the recent years, construction permits increase combined with the possible saturation of the demand and possible decreased trends thereof may create a real estate market surplus supply risks. At the same time, in the construction loans great increase may result in replacing the project financing by increasing loan burden and provide a signal for increased lending risk. For several quarters, if you remember, we during our discussions have flagged the possibility of the developments following the change in pricing. In our annual report, there is a certain reflection on that as well. As a result of the year in the banking sector, there is high yield returns. Purely interest income has increased and low lending losses. The purely interest increase has been determined by the structural changes in the balance, the high increase growth of consumer loans. They have higher returns and bigger interest. And on the other hand, the dramization of the loan portfolio and the increase of the shares in it. On the one hand, there is a higher return rate increase in the loans and in expenditures. The share of the demanded means has increased. There was a certain impact also of the relatively high interest rates in the external markets, the environment. The banking system, one may say, is highly capitalized and is quite liquid. In particular, the capital adequacy and liquidity indicators over here in the banking system have remained stable. The main over the main regulatory thresholds, which is attesting to the high capacity of banking to absorb losses. The capital and liquidity position improvement were contributed to by regulatory buffer gradually phasing in, as well as the banks maintaining additional requirements over and above the regulatory requirements. On the one hand, it's our prudential requirements, on the other hand, it's their decisions that have been taken. Financial stability risks, we may highlight two main risks. One continues to be mostly determined by exogenous factor, the other by domestic developments. One is the geopolitical uncertainty and trade wars and tensions that remain threats to financial stability and economic growth globally. Less than expected global economic growth risks are superseding the high inflationary risks. Materialization of these risks may reflect on domestic macro-financial environment in the Republic of Armenia, creating trends of decrease of economic growth, private lending, and materialization of loans. And secondly, within the recent years, the issuance of construction permits and real estate construction concurrent with the possible saturation of the demand in the real estate and possible decrease of demand may create risks of surplus supply. On the other hand, the big increase of the lending to construction may replace possible sources of funding and provide a signal for the increased debt burden. As for our macro stress scenarios, as an initial shock, we looked at exogenous unfavorable events materializing, which through various transmission, external internal demand, expectation inflationary, energy prices for external market may result in a sharp decrease of economic growth, increase of interest and inflationary pressures. The shocks presumably will have their impact on 25-26. Thereafter, their impact will phase out. That's the stress scenario. The banking system, as I mentioned, is characterized by capital and liquidity high buffers indicators and stock. So for the banking system, the macro stress testing results attest to the fact that even in the worst pessimistic scenarios, the system is capable of absorbing possible losses, maintaining the continuity of financial mediation function. The entire 3-year horizon of stress test made up about 150 billion drams of unexpected losses, which is equivalent to 1.85% of risk-weighted assets. This estimate, among other factors, was the basis for us in Q3 of 24 to increase by 0.25% the countercyclical buffer requirement. In 24, the economy of the Republic of Armenia continued to be in the growth rate of the financial system, and the gap of loans in the GDP has shrunk. The loans in the GDP has almost become equal to its long-term trend. The red line has approached the black one from the bottom. The financial cycle index increased over the years as well, mostly determined by mortgage and consumer lending in big volumes. The macroprudential policy of the central bank was aiming at targeting the cyclical, the possible risk developments ancillary to cyclic nature. Responding to the cyclical developments in the lending, the board of the central bank in Q3 of 23 increased by 0.25 percentage points the countercyclical buffer requirements. As of May 125, countercyclical buffer is 1.75%. You may remember that in the stress test environment, when we made the estimate, the risk weight assets 1.85% should have been the 150 billion potential risks to be covered. We increased the capital buffer by 1.75% already. The increased rate, in deciding on increasing the rate, the central bank considered also the already accumulated risk assessment in the bank's balances, the possible augmentation of the capitals by the banks, the stress testing results, as well as the buffer rates increased possible impact on the assets. Over the year, another instruments of the macroprudential system remain the same. The collateral mortgage loan to collateral is 90% ratio. For non-residents, foreign exchange loans 70%. This is determined by the fact that essentially the mortgage lending mitigation of activity is deemed to be possible, and the central bank may come up with inexpedient assessment of additional interventions. I'll conclude that questions are welcome. Arka. Thank you, Mr. Galstyan. One adjustment. NPL percentage in the portfolio. What's the percentage? 1.2%. The red line in the right axis. Mr. Galstyan, in general terms, we see that within the recent period in the economy there is a situation of decline in certain sectors, mostly in re-exports and industry. So when we look at it in the banking system, the situation seems to be okay. So what are the general expectations for hereafter? Do we have estimates about the situation continuing hereafter? Staying good for the banks, bad for the economy? I wouldn't say decline, I would say slowing of the growth rate in the economy. There are certain re-exporting dimensions where we have negative indicators, but that's also in our communication, in our monetary communications, we have mentioned more than once that we're back to normal. The Armenian economy returns to the growth rates that are more commensurate to its potential, and it's not a bad development. From this perspective, we have in the banking system a certain increase of loans, which we demonstrated, which in the mid to long term will continue, persist, I believe. As for the overall situation, the banks also, if you look at the structure of their incomes, there is an increase of the non-interest income. In our assessment, the increase of non-interest incomes at least will persist this year. In conditions of global uncertainty, Russian-Ukrainian conflict and whatnot, naturally there would be jurisdictions or situations whereupon the money will gravitate towards stability and certainty. Hopefully within the recent years, the macroeconomic stability in our country has been obvious to investors, gaining a certain stock of trust by them. And I don't think that as a result of rapid developments, we will have outflow from the Armenian financial system. About the Forex, I remember beginning with 24, all international IFIs, Eurasian Development Bank, had estimates, predictions that sooner or later the dram will devalue against the dollar, but as we see, even now the opposite is true. Even the central bank does additional purchases in certain situations. Linking this with the situation in the economy, when we look at the economy, the factors that were contributing to devaluation of the dollar essentially have also slowed down. The remittances are still high, but the outflow is not small either. So what's the situation here? Here again, I would single out several factors. The economic agents, when we give signals to economic agents, we have to exercise caution, because any person, especially regular citizens, they look at the nominal exchange rate. 1 dram or $1 equals 385 drams. Whereas in reality, in order to properly perceive economic processes, you have to look at the real effective exchange rate behavior. And there you may be following that we see that there was a sharp evaluation of the appreciation of the Russian ruble in the exchange rate Armenian dram Russian ruble to begin with. And secondly, we see that in Russia the inflation still continues to be higher than in Armenia. Under the impact of these two factors, we understand that the Armenian dram is somewhat devalued vis-a-vis Russian ruble. Russia is one of our main economic partners. And the same may be stated about the Eurozone. From the beginning of the year, it was 1.04, 1.14 vis-a-vis dollar. It has strengthened a little significantly. It's also determined by geopolitical developments, certain capital, presumably outflows from the US to the EU, the second most developed financial market. And in these conditions, the Armenian dram's seeming nominal unchanged situation of dram versus dollar does not reflect the real effective rate. In the real effective rate, Armenian dram has devalued, which creates certain possibilities for our exporters. As for your second part of your question, the demand-supply equilibrium, we see at this point that we look at it ex post, of course. As you mentioned, we have done certain purchases when we see that the market functionally is lopsided. And in this case, again, we see that the demand for foreign currency is less than the supply, than the offer. So there are pressures downwards in terms of exchange rate. I apologize, Arka, the question first. Mr. Galstyan, about these protest actions about banking fraud The participants state that they have many times applied to the central bank but got some inscrutable responses. So what specific measures are taken by the central bank? In particular, there was discussion, if I'm not mistaken, Mr. Nurbekyan was saying that it's being discussed to consider possible insurance mechanisms or certain possibilities thereof. And by way of follow-up, are there any thresholds or volumes that you can mention about the deferred liabilities by three banks? Do we have numbers? Do we have figures? Presumably we will be able to disclose those numbers. I'll start from afar in order for our listeners and watchers to have more clarity about this. Our study of those cases demonstrates that in the predominant majority thereof, people have fallen victims to deceit or voluntarily have shared their CVVs and PIN codes, things that should not have been disclosed to third parties. Fraud is internationally proliferant practice. It's not only us. It's almost ubiquitous. Whoever I've talked with in the recent periods, in all countries, it's when you move from the analog to digital economy, of course, these locks become digitalized and people should be paying as much attention to their physical assets preservation as do they pay to the virtual domain assets, which is why I have to plead with and request our compatriots never to release to anyone your personal data. There is new phishing technique. They make phone calls and tell this is from a cell phone operator, telecom company, one of those three. We want to fine-tune your 5G network, so please, you will now receive an SMS. In order to have a faster internet, please press that message, and through that they fish the code. Through the code they enter their banking services applications, and there already no one can preclude anything bad from happening. From this perspective, I do beseech you, do not release it to anyone unless you are 100% certain that it's a bank employee or someone you know. Hang up, call back yourself, make sure that that call was really originating from the bank and that was really the service implied. We have to put up a fight against it jointly. If one party opens up the entire arsenal and the depot, there is protection becomes redundant. As for the cases at hand, the good news is that it's diminishing. We have taken certain actions with the banks. The banks have taken certain actions themselves with our help and under our advice about protecting the two-factor authentication, not using the same gadgets. Certain precautions have resulted in Q1 having 408 cases. Maybe not accurate number. There are still pending cases that the law enforcement is still processing or doesn't have the record of. What have we done? We have attempted to look into every case individually. After this survey, we have collected information on the basis of which, if those cases resulted in the bank being held responsible or highly likely that the bank was at fault, they called an employee, for example, a call center employee didn't respond for 3 hours, for example, or maybe there was a bug in the product design which the fraudulent players have abused during the transition from online to offline. The product that could only have been used to make payments, it made it possible to use it to transfer to an account and cash out. In all of these cases, the banks, without much ado, immediately returned funds to the individuals. We've dealt with that part. There are two more dimensions where an individual, through deceit or a phishing attack, has disclosed his data, and they have taken a loan on his behalf or taken over the assets on the account. About such loans, the three banks made a statement that they have imposed a 3 to 5 years moratorium. There will not be impairment of credit history, and no interest will accrue. I had a call with them over the weekend. The agreement is, and most probably tomorrow or today or tomorrow, they'll make this statement. They extend by 3 to 5 years this moratorium until the case is closed. So the justice system in the country is up to the court. The banks will await until there is a verdict or a ruling over the case, and only when they would be found to be at fault, they will compensate fully. If it's the individual found at fault, it will return to business as usual. That's about the loans. As for taking over the assets, siphoning off the assets from the accounts, it's a little bit more complicated. Hopefully the discussions will be arriving at a certain consensus conclusion one of these days, and we'll let you know. You know what it boils down to? We should consider the other party as well. Let's imagine incentives are put in place in order for we arrive at an agreement. I disclose to you my full private data. You take everything, siphon off everything, and then we collude and arrive at some deal. And then I report assets stolen. We need to understand that we should not allow for loss of trust in the system. We should find solutions, but the biggest issue, I reiterate, is that people fall prey to fraudsters and release their personal data voluntarily, allowing the fraudster to enter their devices and through there to commit whatever fraud they do. As for the numbers of cases, I'll ask. As of this point, I can't tell about the sum of all the claims, but the three banks you mentioned have 230 clients whose liabilities they have deferred 3 to 5 years. As Mr. Galstyan mentioned, the banks would make a statement shortly that until the investigation, judicial inquest is over, there will be no liabilities. They will be deferred. When they say the central bank doesn't lend us an ear, there was a meeting in the central bank with the representatives of the initiative group to begin with, and then one of the main requirements was exactly not to defer it by a certain term, but to defer it until such time as the law enforcement and justice systems arrive at a certain solutions. We have hearkened to this and tried to negotiate with the banking system partners. As a result, they conceded, and this issue seems to have been dealt with as of this point in time. It's also very important for people to report and the case be opened. If the person didn't report and there is no case pending, these decisions do not apply to them. Mr. Galstyan, about geopolitical uncertainty, we know our central bank keeps monitoring the Fed's and ECU's performance. The Fed is on standby, doesn't come up with clear signals. In this situation, when the ECB, Fed, and others diverge, what's our path? What are we waiting for? Where do we get the signals about the interest rates? In this respect, we're not waiting for anyone. We have our own plan of activities. From the monetary policy perspective, our policy framework has changed. We now have a 3% target, and we have a new framework where we discussed various scenarios. Some scenarios have expectations higher, some lower over the market, and as a result of discussing all of these scenarios, next week the new cycle will commence. On Monday we have a pre-session. On Tuesday we'll have a interest determination. The Fed is matters because the global interest rate is the US dollar. One determined by the Fed, and if they, whether under geopolitical developments or internal fiscal discussions or problems, may arrive at a situation which is quite likely, by the way, that the long-term rate will remain in the high domain. Presumably for the world, the neutral rate will be higher than we would have liked, because the high neutral rate in America translates to Armenia into a higher rate, bigger burden on the economic agents naturally, but that essentially is a fact we have to deal with. Since you mentioned the 3%, of course, the day's subject is not about that, but we see that it increased. Looking back at our decision, it's to some extent still early to say something whether it was justified or not. It's definitely a justified decision. It was not a situational decision. For years on end, we were improving, perfecting these frameworks with what is inflation? Inflation is an expenditure. If you can, as a result of trust or reputation, under the inflation targeting, or decide the target that is below, from 4 down to 3, that means you, for businesses, reduce the long-term uncertainty in expenses. I believe we did a good step and well prepared. It's not situationally, the inflation may be higher or lower. Our promise is that in mid-term, as we kept maintaining, our inflation will be 3%, and I think the central bank, in its behavior and its reputation, has proven that it is capable of sticking to the promised target of inflation. If you have looked at the numbers, since 2006, when we moved to inflation targeting, all the way to 24, inflation was 4% against 4% target. We're now in a new environment, and I believe in terms of credit worthiness, it's a good precursor of the future. Sometime down the road, we will reflect on the policy in retrospect, and it will be valued what we did today. One more question. Days ago, the Prime Minister, you took part in a discussion in the Prime Minister's office about the certain galvanization of non-cash transactions. What's our main target? It seems as though within the recent years, every possible decision and law was hitting the same purpose. We have a significant increase of non-cash transactions. We're not discussing because we have a problem with that. The discussions is about the economic policy decisions along various dimensions to be in sync and in tune with the tactics we have chosen, and we try to also somehow stimulate the reduction of the shadow, making payments more comfortable for people. It leads us back to the previous question of our colleague. We are moving from an analog environment to the digital one, and the risks will definitely increase. But we have to meet at the same time that the opportunities presented by the digital toolkits, not queuing up for hours, doing everything in a domain which is maximally protected, should be weighed against the risks that may emerge. By way of adjustment, you mentioned significant increase in volumes of non-cash. What's the ratio of cash to non-cash in trade? It will be difficult to pinpoint the numbers. We'll look it up and tell you. But if I'm not mistaken, months ago we had a situation when for the first time non-cash transactions exceeded cash transactions. Months ago, end of last year, if I'm not mistaken, but we should look it up to be more accurate. And about crypto assets of the subject, are there people who apply to become licensed? The law has a transition buffer period, 18 months. We will use this 18 months to develop secondary legislation. The central bank should, in the wake of adopting this law, is bound to develop the secondary legislation to clarify the thresholds, the types of licenses, the procedures. So that's the work in the pipeline now. Yes, as we speak, we commence on that. The law was enacted very recently. Mr. Galstyan, the bank has been studying a long time the digital drums. Do we have a conclusion already? That is an interesting subject discussed at great length. The most recent discussion took place last Friday. The board, the executive have come together. We developed development dimensions, and we agree about one thing at least. We have a team which believes that there is no need for it at this point in time, because if we have a good payment and settlement system, there is no need for it. The other team claims there is a need for it because that's where the world is headed. Development prospects hold a promise for such a project, but the consensus of both groups is that this is not a point in time, it's a journey. We need to keep investing efforts in it to be at least informed about what's transpiring elsewhere in the world. In this respect, we have interesting things to do yet, and this is in our research radar. If there are no more questions, thank you very much for your attention.